The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Thank you for taking the time today to join us as we are going to cover the North American VersaChoice 10 product. Go ahead and write down any questions that you might have, and I will be following up with each of you individually after the webinar. I'm going to go through a couple of poll questions throughout the course of the webinar today. The faster you respond to these questions, the faster we can move forward. I'm going to go ahead and get started with the intro slides so that we can start learning more about the North American VersaChoice 10. So our IMS Business Builders is meant to help you. When you refer a producer over to us and that producer contracts with us, you will receive a $50 check.
Hey, Nicole, I'm sorry, it's Casey. I don't mean to interrupt, but for some reason now it's back to your just your generic intro slide. It's not your presentation.
The referred producer screen?
Nope, it's just now. There you go. Now I think you're sharing. There you are. You're good now.
Okay, thank you.
Thank you.
Okay, everybody. So this is the referred producer program. I apologize. So as I said, when your referral gets contracted, you receive a $50 cash check. Then when they write their first piece of business through IMS, you will receive $100. Then going forward, we will pay you 20 basis points on any of their business written. That is not any kind of hierarchy. It is just our way of thanking you for referring a producer to us. Just as your business is built on referrals, so is ours. And the next slide that we are going to cover is the back office support that we do have to offer here at IMS. From the minute you get a case, you call in. We have no voicemail. We have no automated systems. You're going to get a live person on the phone who is then going to transfer you to someone to assist you, whether it's in the life or annuity marketing department, or if it's a new business issue that you have. You'll get transferred to that person, or if it's a new case that you're working on, we're going to help you with all your case designs, get all your quotes out to you. Once you're ready to write that piece of business, we're going to get you your applications, your product training links, anything that you're going to need to complete that piece of business. Once you have the business completed, then you can send it back into us. We will scrub it and let you know of any changes that need to be made, and then follow up on it every 3 business days to ensure that you are paid in a timely manner. The other thing that we do have to offer here at IMS is top sales coaching and expertise from some of our top producers. Our paperless contracting system makes conducting business with us so simple. Adding a carrier is as simple as sending or contacting your marketer and requesting contracting with an additional carrier. We have a fantastic website full of business building tools and resources and forms at your fingertips. The next thing we're going to discuss is our creative marketing department. This department works for you all day long. They do any kind of marketing pieces that you may need, whether you need social media consulting, whether you need a website designed, if you're going to have a seminar and you need a mailing for it, they will assist or design it completely for you. Any flyers, postcards, newsletters, branding, you name it, they do it, and they do an impeccable job. If you have any questions about our creative marketing department, do not hesitate to give Jacob or Sean a call. They would be happy to speak with you about anything that you might need as a marketing piece. Our website is essential in our company. It has all kinds of sales tools on it. Under the support tab, you can go in there and there are business building techniques, all kinds of support that you might need, as well as under that support tab, there's a link for our E&O insurance that we now offer for $450 annually. You can get your forms online. You can look at the annuity grid, the long-term care product grid, and you can do term quotes as well as income rider quotes. I'm going to launch my first poll question now, and that is, would you like to receive more information on IMS Wealth Management? IMS Wealth Management was designed for our agents when the DOL was going into effect. It only requires you to have a Series 65, a CFP qualification, or a CHFC, and it gives you another avenue to place business. Say you have a client who has $500,000 and you can only place $400,000 of it in an annuity. Where are you going to put the other $100,000? This gives you a source so that you don't lose that portion of your client's business. And if you would like more information on IMS Wealth Management, please answer yes. And Charles or Mike Hansen will be following up with you after the webinar and go over what wealth management has to offer for you. And I hate to do two polls back to back, but I'm going to. The next one is going to be about our upcoming Life and Annuity Academy. We have just announced the dates for our next Life and Annuity Academy. It will be May 8th through the 10th in Des Moines, Iowa. This is an excellent opportunity for agents who are active in the life and annuity markets looking for new strategies and ways to increase their sales. These are more of a marketing summit than they are product oriented. We bring in some of our top producers and they go over the sales ideas that they have used over the years to get them from the bottom to the top of the 1 percentile of commission earners. You fly in on a Wednesday evening. You have a brief meeting Wednesday night. You are in meetings all day on Thursday. Friday morning, you have another brief meeting, and you're usually home by Friday late afternoon. It is, as I said, an excellent opportunity. If you would like more information on our upcoming Life and Annuity Academy, please go ahead and answer yes. That will put you on the interested party list, and we will be reaching out to you about the upcoming all expense paid training. Give it a few more seconds here. Everybody's participation in this is greatly appreciated. Okay, I'm going to go ahead and close out this poll question. And the last thing we're going to talk about today is our IMS 2019 Marketing Summit. Any of these combination of premiums makes you eligible to attend. It is going to be at Naples, Florida at the Ritz-Carlton, August 25th through the 29th. Still plenty of time to qualify. This is a gorgeous, gorgeous location. Shopping, golf, spas, anything that you could want to do will be at this summit. And it gives you a great opportunity to meet the IMS family and relax and do a little bit of work, but in a very pleasant environment. And with all of that being said, I am going to go ahead and turn the mic over. Casey Lane from North American is going to be joining us today to discuss the North American VersaChoice product. Casey, can you hear me?
I can hear you. Can you hear me, Nicole?
Yes.
And can you tell me if my
Your
one
slides
slide isn't?
are, yep.
Awesome, awesome. Hey, Nicole and I talked beforehand, no matter how many of these you do, inevitably there's some little glitch that happens. So I'm glad things are running smoothly so far. Well, Nicole, thank you very much for the introduction. I appreciate it greatly. And folks, on behalf of myself and all of the other employees here at the North American Annuity Division in West Des Moines, Iowa, thank you for taking time out of your busy schedules to join us here today. Obviously, you folks are independent agents that work on commissions, so for you to take 45 minutes to an hour or so out of your busy schedule and away from those individuals is certainly very much appreciated. Thank you, Nicole and IAMS for having us on and participating in our webinar today. And more importantly, thank you guys for being a true partner with North American Annuity. Well, obviously, Nicole and I want you folks to get the most out of your time here with us today. So my one and only piece of homework for you is actually kind of in class work, if you will. So what I want you to do is, as I'm going through my part of my presentation, I want you to be thinking in the back of your mind about your database of clients and prospects. And if a client's name or a prospect's face pops into your mind on whatever it is I'm talking about at that particular moment, I want you to write down that individual's name right then and there. Because I guarantee if you're anything like me and you try to wait till the end of the presentation, you're going to forget who it was you wanted to talk to and what it was you wanted to talk to them about. So my goal here when we're done in the next 45 or so minutes is that each of you has 2, 3, 4 or more names of clients or prospects that you can reach out to and you can talk to about the items and the content that we're going to go over with you here today. And I'm going to make it pretty simple for you because I've got really 3 topics, if you will, on my agenda. And I'm going to make it easy for you to remember those 3 topics because they're all going to start with the letter P. So it's going to be the 3 Ps, if you will. The first one is we're going to talk just briefly about some point of sale client approved materials. After that, I'm going to move on and we're going to talk and spend most of the time on product and specifically one of our top selling index annuities, the Versa Choice product. And then lastly, because you're probably going to be asking at that point in time, well, that's great, Casey, but you know, what's in it for me is we're going to talk about some perks for you, the producer. So we've got point of sale, client approved materials, we've got product in the Versa Choice, and lastly, perks for you as the advisor, the 3 Ps. So what I want to do is, I like to start with some of these value adds, non-product related items, because you know what? You can look down on IAM's website, you can pull up any product you want, you can look at index annuities, and you know what? Every one of us, every carrier out there, we all have index annuities. We all have good index annuities. Some are better than others for certain situations. You know, no one product, no one company is going to be the best fit for every one of your clients and prospects. And we all know that as carriers. There's enough business to go around. And as long as we get our piece of the pie, we're satisfied. So one of the things I think differentiates North American from a lot of the competition is we do have an award-winning marketing communications team. They've won numerous awards, industry awards. So we do a great job of non-product related promotional things. Yes, we still email blast on products. We have to continue to push our products out there as well. But what we've done, I think, better than any other is we've really, truly put together a nice package of value adds, programs and systems that are going to put you, first of all, in front of more clients and prospects. And when you're in front of those clients and prospects, we've got some great point of sale, client approved materials, most of which are customizable. You can you can go on our website and drop in your own information in there and send these things or leave these things with your clients. So for time purposes today, we're not going to spend time on some of the value add programs and systems, but I'm going to go to the next step of that. So when you've already found that prospect and you've set that appointment up, let's talk about some of our more popular point of sale client approved materials. And this is a real good one because your clients and probably you yourself have been riding a wonderful bull market the last 10 years. I mean, obviously we can see here on the screen we've got a slight blip here, the last 3 months or so, but man, it's been a heck of a ride, hasn't it? My 401k sure showed some promise up until last year or so. We've seen a little more ups and downs. The point of this is, you know what, Mrs. Klein, if you've been around long enough, you've seen some years where we had some decent bull runs. And you can see these here on the screen. We show you what the start date was, the end date, and, the percentage growth over that time period. I mean, from 2009 up until end of last year, I mean, you were talking positive 300% bull markets. The question I've been asking myself for the last probably 4 or 5 years is, you know what, when is it going to happen? When is there going to be a downturn? When is there going to be a correction? Because you know darn well at some point in time, it's going to have to happen. So this is a nice reminder to clients that, hey, yes, it has been a great 10 years, but are your retirement assets prepared for that next market downturn? And again, real quickly, you can see here, you can customize this with your own information. And this next piece kind of goes along with this one because, Mrs. Client, when we see that downturn, when that 401k, when your funds, whatever it is you have in the market is at risk, you could certainly lose money. And we've seen over years, if we want to, if we backtrack here real quick and we look at the 07 to 09 one where we lost 57%. I remember my 401k back then. Holy cow, it took a hit. So, Mrs. Client, let me ask you, if your 401k loses 50% of its value, what do you have to make to get back to even, or what's that break-even burden? And you probably know better than I do. Most clients just instinctively are going to say, well, of course, 50%. If I lost 50, if I just make 50, I'll be back to even. That's not the way it works, unfortunately, folks, is it? You lose 50%, and I can confidently share that number or talk about that number because people have seen that. They saw that back in 08, 09. You lose 50%, you got to make 100% just to get back to even. And even if you do, is that going to happen over the course of 1 or 2 or 3 years? More than likely not. It's going to take a little while to get that 100%. Even if you lose 25%, you got to make 33 just to get back to even. So the nice thing about this piece is it's a great educational piece for clients. As a reminder, hey, yeah, there is going to be a downturn. It's going to happen at some point. Let's just see what that downturn is and how much we got to make over the next preceding years just to get back to even. And a lot of your clients, folks, aren't going to have enough time to where they can get back to even. Again, a nice educational piece here, and you can customize this with your own information. Another nice piece, again, kind of going along the lines of safety, peace of mind, principal protection, is just our feature comparison sheet, our piece. Again, now this one I didn't actually pull in the customizable one. This is also customizable. You can drop in your own information. A lot of clients, and probably some of your own clients, have money market accounts. They probably got some CDs. I'm sure most everybody's got a saving account. So this just kind of goes through and shows you on the left-hand side other types of vehicles, investments, products that a lot of clients typically own, and some of the features and benefits of those products. And of course, we can see at the bottom the fixed index annuity. Of the 4 features and benefits, the fixed index annuity checks off every single one of those. So again, your clients maybe or prospects have heard of index annuities, and they probably have a lot of negative connotations to annuities just based on trade publications, magazines, TV, etc. But hey, Mrs. Client, let me just show you, stack up kind of side by side, how does a fixed index annuity look, or what does it offer features and benefits wise compared to some other products that you might be accustomed to. This last one is, again, very similar kind of to the features and benefits, but it kind of lays out the risk, and I don't know why we don't have an arrow across the bottom here, kind of the reward. So it's kind of your risk and reward scale. So Mrs. Client, yeah, you told me you own some, some commodities and some oil rights out there. Those would be kind of in our alternative category. And you're right, you can make a whole heck of a lot. The rewards could be great on there, right? But the risk is also great on those products that are on this end of the spectrum. Then, of course, cash, CDs, we mentioned a money market account. Hey, the risk is very low, but unfortunately, so is the reward, the upside opportunity. So let's see where a fixed indexed annuity lies on that risk and reward spectrum. And you're going to find it's going to lie almost smack dab in the middle because an index annuity is going to give you the safety, the features, the peace of mind that these products and investments do, but also gives you some of the upside and the reward that these products do as well. So let's talk more specifically now, Mrs. Client, that you agree that a fixed index annuity might be a good fit for you. Let's now dive a little more in detail on specific index annuities. And lo and behold, that's what we're going to do right now. By the way, I'm going to share at the end, I do have another index annuity positioning concept that you can use with clients and prospects as well. Kind of an interesting take on positioning an index annuity. So again, those are just a few of our client approved point of sale pieces. And again, those are educational pieces as well, as you can tell. They're not specific to North America. You didn't see the word VersaChoice or benefit solutions. They weren't product specific. They were just index annuity specific. Let's now talk more specifically about product. And we want to spend a good majority of our time here today on one of our top selling index annuities. It was actually our number 2 selling index annuity in 2018. And the product was just rolled out in November of 2017. So the VersaChoice has been our fastest growing index annuity product that we've had since 2001 when we started selling index annuities. And what we've tried to do with the names of our products here, at least the last 4 or 5 years, is we've tried to design the product and what it's intended to do after the name of the product. So if I was in front of you, I always ask people to, what do you think of when you see the word or the product VersaChoice? What comes to your mind? Obviously, what you can't answer that right now, but maybe you can to yourself. Typically, the first word that pops into people's minds is, versatility. And that's exactly what the VersaChoice is. It is a versatile product. You're going to find it covers a variety of different needs and wants of clients and prospects. It's kind of that Swiss Army knife of index annuities. It covers a little bit of something for most folks. So quickly at a 50,000 foot level, what you see on the screen are some of our top index annuity products, our most popular index annuity products. And we've kind of got this wheel of benefits or wheel of features, if you will, in the middle there. And here on the outside, you can see the different main design or feature of on the wheel. And you're going to find the VersaChoice. It's going to land here in between kind of the liquidity and the accumulation features and benefits. And as we go through this, you're going to find that the VersaChoice product is exactly that. It is a great product for clients looking for some extra liquidity, some enhanced liquidity, some peace of mind liquidity, but also they just want to grow this thing as much as they can for down the road for when they're ready for retirement. Not necessarily for income purposes. You will see that there is a rider that we can add to this product that will drive it more to a guaranteed income sale. But I'll be completely upfront, we don't see a lot of guaranteed income riders being added to this VersaChoice product. But who is a prospect for this product? Casey, who should I be talking to about the VersaChoice product? And really you're going to find, and I'm going to kind of skip through this real quick, you're going to find that you've got 4 main target prospects that you should be talking to about the VersaChoice product. And the first one is that client that just says, you know what, I've got this money right now, it's sitting over here in a CD or a money market account. I want the opportunity still for some safety. I don't want to lose any of it, but I want a little more upside, a little more growth than what I'm getting right now. So the client that's just looking for pure accumulation. They don't necessarily need it for income. They don't plan on using it for income. They're going to use it at some point for themselves, maybe just as a, a systematic withdrawal, whatever it might be. But in the meantime, they want to let it grow as much as they can. We'll talk about the VersaChoice as an accumulation vehicle. Also, clients that are concerned about, possible future liquidity. And by that, what I'm saying is, I'm sure as a common objection you hear from clients or prospects when the word annuity is brought up is that, hey, so you're telling me I'm tying my money up for 10 years? I can't get to my money for 10 years. I don't want that. And we know that's a myth. We know that most, if not all, index annuities offer some form of penalty-free withdrawal. But if you've got a client that maybe says, you know what, I don't know if that 10% amount would be enough if something happens down the road, or maybe if I want to plan for certain expenses, I might need a little bit more liquidity. We'll talk about that and how the VersaChoice can fit. And then the third one also, along kind of those same lines, is that client that just says, well, what if some big emergency pops up? What if I need 50% of my value? I have a big hospital bill I need to pay, or maybe I want to go on a worldwide vacation. I need half of my account. Or what if a client says, well, what if 5 years from now, 2 years, 8 years, whatever it is, what if I just want my money back? I decide this thing isn't doing what I want it to do. Or maybe some new shiny object comes out there and the client wants to get into that. Kind of those peace of mind benefits. And more specifically, when I talk peace of mind, we're going to talk about clients that are concerned about specifically maybe healthcare type issues or costs or expenses. Because that client, most of your clients or prospects probably say, well, what happens if I need assisted living in 7 years? Is this thing going to be able to help me? Or what happens if I can't do those 2 of 6 activities of daily living, but I don't want to go, I don't need to go into a nursing home. I just want somebody to come here to the home and help out, some home health care. Can this thing help me? Or what if I'm confined to a nursing home? Can this thing help me at all? So we'll talk about the details of that as well. And then the fourth prospect, and again, I just briefly mentioned, you can add our Income Pay Plus rider, and I'm going to backtrack here real quick. If you look over here at the accumulation and income box, the clients can add our Income Pay Plus rider to the VersaChoice product, and that does come at a cost of 1.05% a fee annually. And what the Income Pay Plus rider provides is a 6% compounding roll-up on their client's income value for up to 10 policy years. It also has a few other features in it that are a little different, a little unique, but I think, I'm not saying ignore this. If you're looking for some strong guaranteed lifetime income, don't look beyond North America, but I think you're going to find that we're probably going to lie somewhere in the middle of the pack in most situations for clients that are looking for taking income, 5, 8, 10, 12 years from now. There are other riders out there that provide a little higher roll-up, maybe for a longer period of time. The bottom line, I think, when you look at us from a guaranteed income standpoint with the Income Pay Plus rider, even though we lie somewhere in the middle or upper middle of the pack, the difference really between the top guaranteed income rider or product and where we're going to be is not that huge of a difference, but it's kind of a commodity. It's kind of like term insurance. I think a lot of agents just say, hey, I need the most guaranteed lifetime income I can get for this client in 6 years. What's going to show the best? What's going to give them the best? And that's what a lot of agents go with, is the best. And again, we may not be the best in every scenario, but the difference between us and the best is going to be minimum. So I guess my point here is, if you do have a guaranteed lifetime income potential sale, obviously give IAMS a call. They'll help you out, figure out which ones or one or 3 or 5 are going to be in the hunt. But don't overlook us, because we are going to be competitive, but we're not going to be at the top. And I also want to share that on this product specifically, that Income Pay Plus rider is only added in less than 5% of the sales we've seen so far. So it's not getting added a whole lot to this product. We have other products you can add the Income Pay Plus rider to, and we could spend more time in detail on that on a whole nother webinar. So for time purposes today, and because the rider has added a very minimal amount of times on this VersaChoice, we're going to focus on the first 3 prospects today. And we're going to start with that client that says, I'm just looking for some upside potential, some accumulation opportunities. How can the VersaChoice help me in those scenarios? So here on the screen, you're going to see the current interest rates, current crediting methods, current indices on the VersaChoice product. From an accumulation standpoint, this does have some of our better interest rates on some of the strategies that you see here on the screen today. So when you look at our other products, this one's going to have some better rates on certain strategies and maybe not quite as high of rates on a few other strategies. Overall, this is one of our better accumulation vehicles. The other nice thing I like about the VersaChoice product is, even though we talk about versatility, we're keeping it simple in the aspect of the indices, in the crediting methods, the strategies that are available. And you'll see here, when you look at the index column, you're going to see one familiar thing, S&P 500. We've got 3 different S&P 500 indices in the VersaChoice product. We stuck with S&P 500 because it's probably the most common indice. It's one that clients are probably most familiar with. And when we look at our overall sales on older products and even current products that offer other indices as well, the vast majority of the premium is allocated to some S&P 500 index. And again, for time purposes, we're not going to go through each of these 3 strategies, but know that we've got just your standard S&P 500 index. We've got a low volatility daily risk control index as well, based on the S&P 500. And we also have a multi-asset risk control index on the S&P 500. So 3 different S&P 500 indices available within the one product. Now, when you're talking accumulation, if a client is specifically looking for just pure accumulation, I encourage folks to at least take a look at allocating some of the premium to 1 or 2 or all 3 of the last 3 indices that you see here, the S&P low vol strategy, the Mark 5, and the S&P 500 with the annual participation rate. Because these 3 strategies, indices, are what we call uncapped strategies, where we don't apply a traditional cap to the upside. So by that I mean, and you're going to find 2 of them use a margin or spread crediting method. By the way, there's a high band and low band. That's at $75,000. Minimum premium is $20,000. For example, Mrs. Client, if you allocated all your premium to the S&P par rate strategy, let's assume you had less than $75,000, you're going to get a 30% participation, meaning if the S&P 500 does 8%, you're going to get 2.4% or 30% of that. If it does 20%, you're going to get a 6% interest credit. If you allocate some of your premium to this Mark 5 and the S&P 500 does 8%, that Mark 5 index does 8%, you're going to get an 8% interest credit. If it does 20%, you're going to get a 20% interest credit because there's no current spread or margin on that strategy. And just one more example, Mrs. Client, if you had $100,000 and you put it into the low vol S&P strategy and it does 10.6%, that index, we're going to deduct the margin of 160, you're going to get 9. If it does 6.6%, we're going to deduct 1.6 and you're going to get 5%. So again, these are uncapped strategies, whereas the other 2 here are capped. Now, let me make it clear that I'm not saying these 3 are better than the monthly point-to-point cap or annual point-to-point cap. I'm not saying that. What I'm saying is, from a pure accumulation standpoint, there is more upside potential on these for the simple fact that they're not capped. Now, I will say a 6% annual point-to-point cap right now in today's interest rate environment is a very competitive cap. I would also tell you that, hey, and the question I get a lot is, Casey, so okay, which one should I allocate my premiums to? Which one's going to be the best one? I don't have the crystal ball. I cannot tell you which indice or crediting method is going to be the best one this year. And you know as well as I do, no one indice, no one crediting method has been the best performer year in and year out, year over year. The beauty of this is you can allocate, you can put as little or as much in any one of these indices or crediting methods as you want to. And on policy anniversary, you can reshuffle the deck any way you want to. So with that being said, let's take a look real quick. I'm going to show you a quick screenshot of an allocation. This is 100% allocation to that Mark V strategy, where going back here, you can see currently there is no margin or spread. Client put in $250,000, and what you see here on the screen is 3 different scenarios looking back over a 20-year period on that specific index. Looking at current rates today, we'll see that over the most recent 10 years, that would have credited an average annual interest credit of 5.77%. If we look at the lowest 10 consecutive years of the last 20, we'll see that that would have credited an average of 4.21% per year for that 10-year period, and the highest 10 years of the last 20 would have credited 7.16% interest over on average each year over that 10-year period. Now your client might ask, well, so I'm going to get 7.16% for the next 10 years? No, not saying that. So am I going to get 4.21? No, I can't guarantee that either. So what's more than likely going to happen, Mrs. Client, is that over the next 10 years, you're going to see probably somewhere between 4 and 7% interest credit. That's what these things are designed to do, is provide anywhere roughly from 1 to 3% above what traditional fixed annuities are doing. And that's what we're seeing here in this illustration. Now the nice thing is, and remember, this strategy is an uncapped strategy, so you will see some years in here where there are some double-digit interest credits, 10%, 13, 11, 13. Over here in the lowest, we don't see any double. Oh yeah, there's one, there's a 10 in there. So again, this is an uncapped strategy. So from an accumulation standpoint, the Versa Choice product, again, is a great just standalone accumulation opportunity product. Now, that was the first prospect, again, was just accumulation. The next one, if you remember, was that client that's kind of looking for, the objection that you're going to get is, I don't want to tie my money up too long. What if I need some extra money for this or that? Or what happens if this, I like to call these kind of the peace of mind features and benefits. And what the Versa Choice product does allow is these peace of mind benefits and features via an optional liquidity rider that we call the Optional Enhanced Liquidity Benefit Rider, or ELB rider. Now this rider comes at a cost of 50 basis points, and that's an annual charge for the life of the contract. And you're going to find that this one rider provides up to 4 features and benefits. And I'll talk about what I meant by up to here in just a second. The ones on the left-hand side of the screen, I'm going to put them in kind of quadrants. So these first 2 quadrants over here, anybody and everybody that adds this rider, and by the way, you have to choose this rider at the time of issue. You can't 7 years from now say, hey, I want that return of premium feature. Let me have that rider. You have to add it at the time of issue. If for some reason your mind changes 2 years from now, 3 years from now, 6 months, actually it has to be at least after the first policy year. But anytime after the first policy year, if your client says, you know what, I'm not concerned about any of these. I don't need these features and benefits anymore. The rider is revocable, so it can be removed, and that charge will stop at that point in time. Now, your client can't change their mind again 4 years from that point and say, I want it back on. It's revocable, but once it's removed, it's off for good. So the first 2 quadrants, again, anybody and everybody that adds this rider gets these 2 features. We'll talk about these 2 features in a second. And I will preface that these 2 features are available by answering one simple knockout question. And we'll share with you what that is here in just a second. So there's a lot of words here on the next screen. Just bear with me as I go through this and just kind of quickly cover. I'll summarize these benefits. But let's talk about quadrant 1 first. That was the enhanced penalty-free withdrawal. So Mrs. Client, this product allows you to take 10% of your premium in the first year. If something happens, you need to take a little bit of money for whatever reason, you can access 10% of whatever you put in during the first contract year. If you don't utilize that at all in the first year, starting day 1, year 2, you can take 20% of your end of year 1 accumulation value at that point in time. Now, if you happen to, let's say you do want to take, let's say you take the full 20% in year 2. What happens is in year 3, it reverts back to 10%. If you don't use it that year, in year 4, it rolls back up to 20%. So it's going to accrue to a maximum of 20%. Basically, every other year, your client knows that they have access to 20% of their beginning of year accumulation value. Is that a lot of sizzle? No, you know, it's again, it's a peace of mind. It's a feature. It's a benefit. The client's going to ask, well, what if I need more than 10? Okay, basically every other year, or if you don't use it, you'll have access to 20% starting in year 2. Pretty simple, pretty straightforward. Again, just a little extra peace of mind. Quadrant 2, again, both of these come for everybody that purchases the rider. Quadrant 2 is probably, I think, has been over the last 3 years, 4 years in general in our industry, has been kind of a driving force of a lot of index annuity sales. And this is kind of that big peace of mind for that client that just says, well, God forbid, what if something dramatic happens? What if I need to get my money back? Or what if I decide I'm just going to go ahead, I want my money, I want to take a whirlwind tour, or I want to pay for my grandkids' wedding that they're going to have, it's going to cost $1 bazillion. Anytime after the second contract year, your client says, you know what, I want my money back from that product I've got with you. I need my money. I want my premium back. What can happen? What can you do for me? Anytime after the second contract year, we will return to the policyholder, worst case scenario, 100% of the premium that they put in the contract. Now, I say worst case scenario because let's use an example of the client deciding to use the return of premium in the 4th year. So you've had 3 years of potential interest credits, and let's assume that you've had 3 real good years of interest credits. So obviously, this is I didn't mention this is a 10-year contract, so there's surrender charges for 10 years. So even in the 4th year, where there is, and off the top of my head, I can't remember if it's a 6% surrender charge. Let's assume it's a 6% surrender charge. We're gonna charge that client the 6% surrender charge. So maybe they've had interest credit of, you know, a total of 18% over those 3 years. So their cash surrender value is actually greater than the premium they put in the contract. So they're always going to get back the greater of the cash surrender value after surrender charges have been applied, or 100% of their premium, whichever is greater. So again, worst case scenario, Mrs. Client, anytime after the 2nd year, you need or want your money back, North American will give to you 100% of the premium you put in the contract, less any withdrawals that they may have taken if they took a withdrawal. The other thing I will point out is that even, let's assume in the 5th year the client utilizes this. Remember, we've been charging a 50 basis point fee out of the accumulation value each year for these features. So their accumulation value, or they could have actually less than what they put in because of the fees, and maybe there's been no interest credits. The market's been horrible for 5 years in a row. However, we're going to return back to them again. That return of premium does include the fee. We're not going to deduct the fee that we've charged and give them back $96,850. If you give us $100,000, anytime after year 2, you want or need that money, you're going to get $100,000 back, worst case scenario. So if you think about it, just even in and of itself, a return of premium feature, 50 basis points, that's not very expensive. 50 basis points for that peace of mind. And you also have the enhanced penalty-free withdrawal where, again, if you don't need all of your money, but maybe you need a little bit more, you've got that feature as well. So again, those 2 quadrants, everybody and anybody that adds a rider gets those features. Let's move over to the right-hand side in quadrants 3 and 4. By the way, folks, quadrants 3 and 4, you're going to find are first to market features. No other index annuity product has these particular features. And I would probably, I'm not a gambling man, but I would put a few dollars down that your clients have a fair number of concerns about the features, the benefits that these particular features provide. And here's the one knockout question. I mentioned this. The one knockout question is this. On the disclosure form, there's a question that states, at this time, I am able to perform all 6 activities of daily living. Yes or no? If your client checks yes, they get quadrants 3 and 4. It's as simple as that. No health questions, no underwriting, no blood, no urine. Simply, at this time, I am able to perform all 6 activities of daily living. If you check yes, you get quadrants 3 and 4. If you check no, you still get quadrants 1 and 2, not 3 and 4. So we're basically taking the client's word for it and we're taking the agent's word for it. If that client checks yes, we're assuming that you can, at the time that you filled out that application, you can perform all 6 activities of daily living. So let's look at these features and benefits and what do they do? Quadrant 3. Now, most annuities have what we're familiar with or that's called a nursing home confinement waiver. That's not what I'm talking about here in quadrant 3, so stick with me for a minute. A lot of these nursing home waivers state that if you are confined to a qualified skilled care facility for a certain number of days, you can access your accumulation value without any penalties whatsoever. Quadrant 3 is a little different. Typically what happens before your clients become confined to a skilled nursing facility? Typically what happens first is they're not able to perform 2 of 6 or 3 or whatever it is activities of daily living, right? Typically that happens prior to them being confined. So quadrant 3 is an ADL-based surrender charge waiver, and that states any time after the policy is issued, if that client cannot perform 2 of 6 activities of daily living, they can access their accumulation value 100% penalty-free, no questions asked. Now the client's going to say, let's assume that I do that. Let's say I need 50% of my, I want 50% of my accumulation value. Does North American, I'm in assisted living. I'm not confined, but I'm in an assisted living facility, but can't perform those 2 of 6 ADLs. Now, will North American, does a check get payable to the assisted living facility? Absolutely not. The check gets paid to the owner and is sent to the owner. They can do whatever they want with it. More than likely, they're going to utilize the money to pay for those services, but they don't have to. They can, again, go on a cruise if you want to. We're not making the check payable to any assisted living, any home health care service. It's payable directly to the client, and they can use the money however they want to. Again, that's a first to market feature. Nobody else has an ADL-based waiver of surrender charges. There are a few income riders out there that have those, the quote unquote income doubler that's based on ADL features, that will double your income for a period of time, but nobody else has a surrender charge waiver that is ADL based. That's a peace of mind benefit. All it takes is a written note from a physician stating that that client at this time is not able to perform 2 of 6 activities of daily living. That's quadrant 3. Quadrant 4, another ADL-based feature. This is an ADL-based enhanced accumulation value payout. Now you can read all the letters or words in there if you want to, but let me just paraphrase what this states. This states that any time, excuse me, after the second contract year, this particular quadrant can be utilized. It states anytime after the second year, if the client is not able to perform 2 of 6 activities of daily living, they can choose to receive an enhanced payout of their accumulation value over a 5-year period. Now that enhancement is going to be based on when the client, if and when the client decides to trigger quadrant 4. the longer they wait, the higher that enhanced payout is going to be. And in the next screen, I'll show you what that enhanced payout will be. So it doesn't matter when the client isn't able to perform the 2 of 6 ADLs. It's just that this feature is not available until after the 2nd year. I'm going to quickly give you just not an idea or a sales concept, but one way that you can use these kind of interchangeably, these two quadrants 3 and 4. You know what, let me move on to the next screen. Let me show you what these enhanced payouts are first, and then let me move on to kind of the a concept that you might consider. So here are the enhanced accumulation value payouts. Based on the contract year, the client decides to trigger that quadrant 4. Let's assume that the client in year 2 is not able to perform the 2 of 6 ADLs, and they need some money. Obviously, this benefit's not available right now. However, remember, the surrender waiver, they can utilize quadrant 3. They can take out 15, 20, 30%. They can take out whatever they need to of the account value that year. And then let's assume that they decide to wait until the maximum they can for this enhanced payout. If they wait till contract year 6 or beyond and then trigger this quadrant, we'll pay 125% of whatever their accumulation value is at that point in time over 5 equal payments. So Mrs. Client, let's assume at the end of the 5th year, you have $100,000 exactly in your accumulation value. If you want to exercise this ADL-based payout feature, North American is going to pay you $125,000 over 5 equal payments, each of which, if it's non-qualified money, will be part return of premium and part interest. So it's spreading that tax burden out. You're not paying the taxes all up front on the first couple of payments. Well, that's great, but what if I really decide I want to use this thing in the 5th year? Hey, perfect. If you can't perform 2 of 6 ADLs and you want to trigger this in the 5th year, we'll pay 120% of whatever your accumulation value is at that point in time. If you want to trigger it in the 3rd year, you can do that. It's 110%. So basically what this feature does is it's given the client the opportunity to play, if you will, with North American's money over a 5-year period. Whether you decide to trigger it when it's a 10% enhancement, 15, 20, or 25, it's completely up to the client. If they do trigger this feature, this benefit, quadrant 4, basically what they're doing is they have annuitized the contract, and the deferral stage is now over. So basically, they're annuitizing for a 5-year period certain. And they're going to ask, well, I like that idea of getting an enhancement over 5 years, but what happens if I die in the 3rd year of the 5-year payout? Does North American keep the other 2 years of payments? No, absolutely not. Somebody, a named beneficiary, will continue to receive the same payment for the remaining number of years of the 5. We're not going to keep the extra money. So here's a quick numerical example. 45-year-old that puts $100,000 of premium in. In this particular scenario, at the end of the 5th year, let's assume the client can't perform 2 of 6 ADLs. Remember, they have the surrender waiver, ADL waiver. If they want, they can take that $139,000 and take their money and run. Take $100,000, do whatever you want with it. Or they can take 125% of that value, which actually comes out to $175,000 over 5 equal payments of almost $35,000. So yeah, you can take that lump sum if you want, or you can take 125% of that over 5 years. Let's assume the client says, you know what, I've got some extra money laying aside. I don't need to use any of those features or benefits at this point. Let's assume that in year 15, all of a sudden they say, hey, you know what, I think, life expectancy has come down a little bit. I can't perform 2 of 6 ADLs. Let's trigger that enhanced payout feature. In year 15, in this example, the accumulation value is $218,000. We'll pay the client 125% of $218,000 over 5 years. So again, it's an enhancement of the accumulation value at the time the client triggers that feature. Quick summary of the enhanced liquidity benefit rider. Again, I think you found that these are all peace of mind features and benefits. They answer a lot of what ifs that clients are going to come to you with as an agent. And remember, 50 basis points for all, in most cases, all 4 features that you see here on the screen. We don't charge, because a very common question I get is, Casey, I like it. How much is that return of premium feature again? Or how much is that ADL surrender waiver feature cost? You get all 4 of these in most situations for 50 basis points. There's no separate charge for each one. And for 50 basis points, I believe these are some of the best peace of mind benefits out there and features today. And I'm pretty sure that you probably agree. Okay, we talked about point of sale pieces. We just talked about product. Let's now talk about that third P, which was perks for you as the producer. And this is a big one, folks. We are excited about our exclusive producers connection, or EPC program. What this does is it simply rewards you for producing business, index annuity business with North American Company. So for example, if you can write or hit $1 million of issued index annuity business, we're going to go ahead and we're going to send you a retroactive bonus payment of 50 basis points, and you'll start earning that 50 basis points on all index annuity business going forward. So on the Versa Choice, for example, street level commission is 6.75%. If you hit $1 million of production, you're basically going to be like you would have been earning 7.25% from day one. Let's assume you get to $3 million this year in index annuity business. Well, first of all, we're going to send you a retroactive bonus payment on the difference of that $2 million. Ready, the one we already paid you on. So there's $2 million you've been earning 50 bips on. You're going to start earning 1% from that point forward, but we're going to retroactive you back that additional 50 bips. So it's like you've been earning 7.75% commission. And if you can get to $5 million of index annuity business by the end of the calendar year, again, we're going to start paying you from that point 1.5% and retroactively pay you that 50 bips on the 2 million there. That's like you've been earning 8.25% all year long on a 10-year product. And believe me, folks, I know $1 million is not a lot of premium nowadays. 3 million is not a lot of premium. 5 million, hey, you know what? We'll take anything we can, but know that this particular program rewards those agents that hit and write premium with North American. And also, for the first time ever at the North American Annuity Division, we are going to be inviting our top 75 index annuity agents to a Ritz-Carlton Reserve Resort in Puerto Rico in 2020. It's called Connect 2020. The resort is called the Dorado Beach. The name's not on. Oh yeah, it is Dorado Beach. There we are. Again, this is one of a handful, and by handful I mean 5 or less reserve Ritz-Carlton resorts in the world. And the top 75 index annuity producers are going to be invited to attend this fabulous event. There's going to be a training, obviously. There's going to be networking. There's going to be sharing ideas and just basically discovering what's working for other successful advisors out there today. And as an idea, to give you an idea of what it would have taken to be in the top 75 the last 2 years, 2017, 2018, it would have taken about $3.2 million to get into the top 75. That's just an FYI. I can't guarantee you if you hit 3.2 million this year, you're going to be in the top 75. That's what it would have taken the last couple of years to do that. So we talked about point of sale pieces. We talked about product in the Versa Choice and the flexibility and the versatility. And just briefly, we talked about perks for you as the agent. And I will say, Nicole, I did want to share this, but I think for time purposes, I can certainly get to you this presentation. And if anybody's interested in hearing a little bit more about our tic-tac-toe theory, we can certainly get that over to them. But I think for time purposes, we want to make sure that we honor our commitment to hosting this for no more than an hour, which, if, according to my clock, we are right about
there. Yep.
So, Nicole, thank you again for giving me the time.
Thank you, Casey. And thank you, everyone, for joining us. I am going to launch my last poll question. This is, would you like more information on the VersaChoice, which I will be following up with all of you, as I said, after the end of the webinar. But I can get you out the brochure, any illustrations you might need, and the marketing materials that Casey was discussing. If you could all go ahead and answer. Looks like half of you have voted. If we could finish up here within the next 10 seconds, that would be great. Again, I thank all of you for joining us today. That was some very valuable information. Nice rider with peace of mind for 50 basis points. This product really does perform very well. Definitely a talking point amongst you and your clients. Again, thank you for joining us, and I hope you all have a great day.